Jeep, Dodge, and Ram are well-known American car brands that many people love. However, the company that owns them, Stellantis, is having some big money problems. They've lost almost half of their income and have too many unsold cars. To fix this, Stellantis might have to make some tough choices that could change these popular brands forever. In this video, we'll look at how Jeep, Dodge, and Ram became so famous and why they're now in trouble. We'll also try to figure out if Stellantis can solve its problems without getting rid of these beloved car brands. Keep watching to see if this big company can find a way to make things better during this difficult time. Jeep, Dodge, and Ram are more than just car brands. They're a big part of American culture. People think of adventure, reliability, and freedom when they hear these names. Let's look at how they became so famous. Jeep started during World War II. The US military needed a tough vehicle for soldiers. This became the Jeep, which could drive on rough ground. After the war, Jeep became popular with regular people who loved adventure. Dodge began in 1900 and quickly became known for making great cars. Their fast, powerful cars like the Charger and Challenger were very popular. Ram used to be part of Dodge but became its own brand in 2010. It's known for strong trucks that can pull heavy loads and work hard. Jeep's tough design made it perfect for off-road trips. The Jeep Wrangler is loved by people who like outdoor adventures. Dodge is famous for fast cars. People who love speed and power really like Dodge cars. Ram trucks are trusted by farmers, builders, and outdoor fans. They're known for being tough and able to handle big jobs. For many Americans, these brands are part of happy memories. Families remember trips in their Jeeps. Car fans remember their first Dodge. Ram owners are proud of how much their trucks can do. These brands remind people of good times when cars were built to last. They stand for freedom and adventure, which are important in American culture. As we talk about Stellantis' money problems, it's important to remember how much these brands mean to people. If they went away, it would be a big loss for both the car industry and American culture. In 2021, two big car companies, Fiat Chrysler and PSA Group, joined together to make a new company called Stellantis. People thought this would be great, but now Stellantis is having big money problems. They're even thinking about getting rid of famous American car brands like Jeep, Dodge, and Ram. Let's look at what went wrong. When the two companies joined, everyone thought it was a smart move. They wanted to make better cars, especially electric ones, and compete with other big car companies. They hoped to use the best parts of both companies to make Stellantis strong. But things didn't go as planned. Stellantis is now losing a lot of money. In the first half of 2024, they made 48% less money than the year before. That's a really big drop. They're not selling as many cars as they hoped, especially in North America. Stellantis tried to make Jeep a fancy brand, but this didn't work. People who usually buy Jeeps didn't like this change. Now Stellantis has too many unsold cars sitting around, which is costing them a lot of money. The numbers show how bad things are. Jeep sales dropped 20% in August 2024 compared to last year. Since 2018, their overall sales have gone down by 34%. This means Stellantis has way too many cars that no one is buying. To try to sell these cars, Stellantis has to offer big discounts. This means they make less money on each car they sell. They've also had to lay off about 2,500 workers near Detroit because they're not making as many cars. To make things worse, some Jeeps have had problems like engine fires. This makes people trust the brand less. Also, the leaders of Stellantis keep changing, which makes it hard to make good plans for the future. Stellantis is now at a point where they have to make big decisions. What they choose to do will affect not just the company, but also famous American car brands like Jeep, Dodge, and Ram. Can Stellantis find a way to fix these problems, or will this be a story about how a big company failed? Stellantis tried to make Jeep a fancy brand, but it didn't work out. Jeep has always been known for being tough and affordable, which is why people who love adventures and want a reliable car like it so much. But Stellantis wanted to make Jeep more luxurious, like when they made the Grand Wagoneer. They thought this would help them sell to rich people, but instead, it made Jeep's biggest fans unhappy and caused sales to go down a lot. Stellantis made fancy versions of Jeep cars with lots of extra features and higher prices. They wanted the Grand Wagoneer to be like other luxury SUVs. The plan was to change how people saw Jeep from a rugged off-road car to a fancy brand that had both adventure and style. But this didn't match what people already thought about Jeep. People liked Jeep because it was strong and not too expensive, which was perfect for outdoor fans and practical buyers. By focusing on luxury, Stellantis forgot about the things that made Jeep so popular in the first place. Jeep's biggest fans felt left out by this change. People who had loved Jeep for a long time because of its toughness and affordability were disappointed by the switch to luxury. It's like going to your favorite burger place and finding out they only serve fancy fish eggs now. It makes loyal customers feel forgotten. This led to real problems. In August 2024, Jeep sold 20% fewer cars than the year before. Since 2018, their sales have dropped by 34% overall. These numbers show a big problem that happened because the brand changed in a way that customers didn't like. The move towards luxury also made prices go way up. In just 5 years, the average cost of a Jeep went up by more than 50%. The famous Jeep Wrangler, which used to be a good choice for adventurers on a budget, now costs over $40,000. That's so high that many loyal customers can't afford it anymore. These higher prices have not only made it harder for people to buy Jeeps, but have also hurt how people see Jeep as an affordable brand. When people have to pay more without getting more value, they're more likely to look at what other car companies are offering. This has led to Stellantis having too many unsold cars sitting around at dealerships. As Stellantis tries to deal with these problems, it's clear that their attempt to make Jeep a luxury brand has backfired in a big way. The disconnect with loyal customers and the drop in sales show what can happen when a brand strays too far from what it's known for. By trying to reach new markets, Stellantis accidentally pushed away its current fans, a costly mistake that now threatens the future of one of America's most iconic car brands. Stellantis is dealing with a lot of problems right now, like quality issues and changes in leadership, which are making it hard for people to trust the company. These problems aren't just affecting Jeep, but all the brands that Stellantis owns. One of the biggest problems is that Stellantis has had to recall a lot of cars. They had to bring back over 781,000 cars because there was a risk of the engines catching fire, which is really dangerous. This isn't just a one-time thing. It shows that there are bigger problems with how they make sure their cars are safe. Stellantis has also had to recall another 1.46 million cars because of issues with the software that helps keep the car stable. Imagine driving a car you think is safe, only to find out that the systems meant to protect you might not work. This has made many Jeep owners feel like they can't trust the brand anymore. These recalls aren't just a hassle for Stellantis, they're also making the brand look really bad. Each recall makes it harder for people to trust Jeep and other Stellantis brands, which makes it tougher for the company to keep customers and get new ones. To make things worse, Stellantis is also having problems with its leaders. The company has had a lot of changes in its top positions, especially at Jeep. This makes it hard for Stellantis to stick to a clear plan because new leaders have different ideas and goals. It's like trying to steer a ship through a storm while constantly changing the captain. Without stable leadership, it's hard for any brand to follow a clear plan, especially when they're trying to do something complicated like making Jeep a luxury brand or dealing with big recalls. This leadership mess isn't just a problem inside the company, it affects everything Stellantis does, from making new products to marketing and customer service. All these quality problems and leadership changes have made it hard for people to trust Stellantis. When people buy a Jeep, they expect it to be tough and ready for adventure, but now they're not sure if Jeep can still deliver on those promises. This loss of trust can be seen in the lower sales numbers and the growing number of unsold cars. Stellantis has a 77-day supply of unsold vehicles, which is way more than other car companies. People are choosing to buy from competitors who have more reliable products and don't have all the problems that come with recalls and unstable leadership. As Stellantis tries to deal with these challenges, it's going to be a tough road to fix its reputation and get people to trust the company again. The future of iconic brands like Jeep could be at risk if they don't fix these quality problems. To get through this crisis, Stellantis needs to find a way to make its leadership team more stable, improve the quality of its products, and be honest with customers about what it's doing to fix past mistakes. Only then can it hope to rebuild the trust that has been so badly damaged. Stellantis is making a big bet on electric vehicles to help save its struggling brands. They're investing $46 million to change 3 factories in Michigan so they can make EVs. Stellantis wants to make electric versions of popular models like the Jeep Wagoneer and the Ram 1500, but this big gamble comes with its own challenges and risks that could affect the company's future. The choice to invest a lot in making EVs is part of Stellantis' bigger plan to focus on transportation that's better for the environment. This fits with what's happening around the world, where people want to pollute less and follow stricter rules about the environment. By making more of its cars electric, Stellantis hopes to get a piece of the growing EV market and become a leader in this area. But it's a big investment, and it's happening when Stellantis is already having money problems. The company is spending a lot on making new electric models while also dealing with lower sales and quality issues with its regular cars. This is a tough situation. Can Stellantis successfully make new EVs while also fixing problems with its normal car business? Compared to its competitors, Stellantis is pretty late to the EV game. Companies like Tesla, Ford, and General Motors have been working on their electric cars for years, but Stellantis is just starting to catch up. This delay puts Stellantis at a disadvantage in a couple of ways. First, the company has to solve technical problems that its competitors have already figured out. They need to make batteries that work well, make sure the cars can go far on a single charge, and build a reliable network of charging stations. These are all important parts of making EVs work well. Stellantis also has to deal with the fact that people might like EV brands they already know more than new ones. Second, because they're entering the market late, Stellantis has to work extra hard to get EV buyers to recognize and like their brand. Competitors have already built strong reputations and customer bases in the electric car world, which makes it hard for Stellantis to stand out and attract buyers. As Stellantis increases its EV production, it's entering a market that's getting more and more competitive. CEO Carlos Tavares has warned of an upcoming EV price war, where car companies cut prices to gain market share. This could have big consequences for profits across the whole industry. For Stellantis, getting involved in a price war could make their already small profit margins even smaller. Making electric vehicles is still expensive because of costly battery parts and new manufacturing processes. If competition drives prices down, Stellantis may have a hard time making EVs as cheap as gas-powered cars. Plus, an EV price war could lead to smaller or less financially stable companies being forced out of the industry. For Stellantis, which is already dealing with money problems, this is a serious threat to its survival. Stellantis' electric vehicle gamble is full of risks, but it could also have big rewards if they do it right. The company's ability to handle these challenges will determine whether it can become a leader in the EV market or become another victim of industry disruption. As we keep exploring how Stellantis' situation could affect workers and dealerships, it's clear that the stakes have never been higher for this car-making giant. Stellantis' current crisis extends beyond its financial struggles and brand identity issues, impacting workers and dealerships across the country. As the company grapples with unsold inventory and declining sales, the repercussions are being felt by thousands of employees and dealers who depend on Stellantis for their livelihoods. The recent announcement of nearly 2,500 layoffs at the Warren Truck Assembly plant outside Detroit is a stark reminder of the human cost of Stellantis' financial woes. For the workers affected, these layoffs are not just numbers. They represent families facing uncertainty about how to make ends meet. The ripple effect of these job losses extends into local communities, where businesses rely on the income generated by factory employees. These layoffs are a direct result of Stellantis' declining sales and inventory buildup. With a 77-day supply of unsold vehicles, far above the industry average, the company is forced to cut costs wherever possible. Unfortunately, this often means reducing its workforce, leaving many workers to wonder about their future in an industry undergoing significant transformation. Dealerships are also feeling the squeeze from Stellantis' inventory crisis. With over 1.4 million unsold vehicles sitting on lots, dealers are caught between a rock and a hard place. On one side, Stellantis is pushing them to take more inventory. On the other, customers are hesitant to buy due to quality concerns and high prices. This glut of unsold cars means dealerships must offer heavy discounts and promotions just to move vehicles off their lots. While this might seem like a boon for consumers seeking deals, it's a nightmare for dealers whose profit margins are shrinking. The financial strain is compounded by Stellantis cutting marketing budgets, leaving dealers without the support they need to attract buyers. The Stellantis National Dealer Council has voiced concerns that CEO Carlos Tavares is too focused on short-term gains at the expense of long-term growth. Dealers feel abandoned as they struggle to manage overflowing lots and dwindling sales, calling for better incentive programs to help clear inventory. The tension between Stellantis and its workforce is reaching a boiling point. With 98% of United Auto Workers members filing grievances, it's clear that dissatisfaction runs deep among employees. Union leaders have warned of a potential national strike, which could bring Stellantis' operations to a grinding halt. A strike would not only disrupt production, but also exacerbate Stellantis' financial troubles. The company is already struggling with declining sales and quality issues. A prolonged strike could further damage its reputation and bottom line. For workers, a strike represents both a risk and an opportunity to stand up for better working conditions and job security in an uncertain economic climate. As Stellantis navigates these challenges, it's evident that the stakes are high for everyone involved, from factory workers facing layoffs to dealers drowning in unsold inventory. The company's future decisions will have far-reaching implications not just for its brands, but also for the people who depend on them. As we explore the potential outcomes for Jeep, Dodge, and Ram in our next section, it's clear that Stellantis must find a way to address these broader implications if it hopes to survive this crisis. As Stellantis grapples with its current crisis, the future of iconic American brands like Jeep, Dodge, and Ram hangs in the balance. The potential outcomes for these brands, should Stellantis fail to stabilize, could reshape the automotive landscape and significantly impact consumer choices. If Stellantis cannot navigate its financial and operational challenges, Jeep, Dodge, and Ram could face dire consequences. One possible outcome is the discontinuation of these brands as part of a broader restructuring effort. CEO Carlos Tavares has already indicated that money-losing brands might be shut down to save the company. This would mean the end of an era for these iconic names that have been synonymous with American automotive culture for decades. Alternatively, Stellantis might opt to sell these brands to other automakers or investors. This could result in Jeep, Dodge, and Ram continuing under new ownership, potentially revitalizing their product lines and market strategies. However, such a transition would be complex and fraught with challenges, including maintaining brand identity and consumer trust. The disappearance or transformation of Jeep, Dodge, and Ram would leave a significant void in the automotive industry. These brands have long dominated the SUV and truck segments in the US, offering consumers a range of vehicles known for their ruggedness and reliability. Their absence would likely lead to reduced competition in these segments, potentially driving up prices as other automakers fill the gap. For consumers, this means fewer choices when it comes to American-made vehicles that offer a blend of affordability and performance. Budget-conscious buyers who have traditionally turned to these brands for value might find themselves priced out or forced to consider foreign competitors. The loss of these brands would also erase a piece of American car culture that many hold dear. These car brands have been a big part of American car culture for a long time. They stand for adventure, reliability, and freedom. If they were to go away, it would leave a big empty space in the car industry and make many car fans very sad. These people have loved these vehicles for many years. The big question is, can Stellantis find a way to come up with new ideas and change in time to save these popular brands? The company's big bet on electric cars and their work to fix quality problems and leadership issues will be very important in deciding what happens next. Stellantis is at a point where they have to make big decisions, and there's a lot at stake. Please like this video and tell us what you think in the comments below. Until then, see you next time. Until then,